Nigel Farage has built his entire career slamming the elite, but when it comes to tax, he might be using the exact same tax saving techniques as they are, but not through offshore yachts or Swiss accounts. Just 3 simple and perfectly legal moves even you can use to pay less tax. In this video, I'm going to uncover and teach you these legal methods as well. I've got one to cut your tax rate in half, a trick that saved over 22 grand on a property, and a third strategy that'll build a tax-free retirement pot. Before we get into all that juicy stuff, unless you've been avoiding the cesspit that's the 2025 media, you'll be aware that Farage has recently come under fire from some news outlets for dodging tax on his GB News earnings by funneling income through his private company instead of taking it as a salary. While reports claim he didn't pay himself a penny in 2022, no salary, no dividends, despite the business banking hundreds of thousands. Critics accuse him of exploiting company rules to avoid personal tax and national insurance, effectively sitting on the cash while the public picks up the tab. But I've studied his methods and, shock horror, they're all actually perfectly legal. Nigel Farage allegedly funnels his money through a limited company called Thorn in the Side Limited. Of course he does. And that one move is why his tax bill looks very, very different to yours. Instead of being taxed like a normal person through payroll, he channels his income through a limited company. That means it's hit with corporation tax at 25%, not income tax up to 45%. Sounds like a slam dunk, right? But here's the catch no one ever explains. You don't just sit on company money like Scrooge McDuck. If you actually want to use it, pay your rent, buy a car, fund a nice Tuscan holiday, you've got to take it out. And that's where tax stings you again. Most directors, and Farage is probably no different, take money out as dividends because even after that second layer of tax, you still often keep more than if you're just taking it all as salary. Here's the maths. Step 1, the company pays 25% corporation tax on profits. Step 2, you pay dividend tax when you draw the cash out, up to 33.75% if you're a higher rate taxpayer. Yes, it's double taxed. It's like baking a cake then paying an entry fee just to eat it. So why bother? One word: control. You control when you take the money. You can pay your spouse if they do real work. You can leave profits in the company in a good year. You can deduct business expenses before any tax. And you can take money as a salary from your limited and get tax relief. You can also shove cash into a pension and shrink your corporation tax bill at the same time. Let's put some numbers on it. Say Farage's company makes 150,000. First, there's 28.5k in corporation tax. So you're left with 121.5k. Take it as dividends, up to 41k tax. So the total tax paid is around 69,500. The effective tax rate is about 46%. Now it's not massively different from PAYE, but here's the twist. That rate is flexible. He can shift income between years, deduct almost everything short of his pint of bitter, and control how much hits his personal return. And this isn't just for politicians and TV hosts. If you're a freelancer, a contractor, or a side hustler making 50k plus, this can work for you as well. Here's the game plan. Pay yourself a salary up to 12,570 tax-free. Top it up with dividends starting at just 8.75% tax. Claim legitimate expenses, laptop, phone, website, slice of rent if you work from home. Pay your spouse if they do real work in the business. Make pension contributions straight from the company, tax deductible. Even take the money as payroll from your company and get the CT relief on it. If you don't need all the cash, then leave it in the company and defer the tax altogether. Compare that to being a sole trader with potential tax in an eye upwards of 10k plus 50% again for payments on account to HMRC and zero flexibility. With a limited company, you save thousands and you get to play the same game Farage plays. It's not a loophole, it's not dodgy, it's literally how the UK tax system is designed. But Here's where it gets really cheeky. Farage didn't just use a company, he allegedly saved over 22 grand in stamp duty just by letting his partner sign the paperwork. That's more than some people earn in a year, shaved off with one signature. So what exactly did that one signature do? Now, Farage told the press he'd bought a house in Clacton. Fitting, since that's where he's trying to win votes. But when journalists checked land registry records, the house wasn't in his name at all. It was in his partner's, Laura Ferrari. Now, that might sound like a minor detail, but in tax terms, that's a £22,000 detail. And here's why. If you already own a property and buy another, HMRC whacks you with an extra 3% stamp duty surcharge. And in Wales, it's 4%. So on a 750 grand house, normal stamp duty about 25,000, with the surcharge 47,500. That's a £22,500 difference just for the crime of already owning a roof. It's like booking a £250 flight and then finding a hidden £225 charge because you've flown before fee at checkout. It's called the higher rates for additional dwellings, or HRAD. But, and this is a clever bit, if the person buying doesn't own another property, that 3% surcharge disappears. So if Farage already owns a home, which, let's be honest, he does, but his partner doesn't, she buys in her name and boom, no extra 3%. Now, I'm not saying start putting houses in your cousin's name and hoping for the best. For this to work, it has to be real, meaning they're the one taking the mortgage, they're the legal owner, and you're not secretly bankrolling it from the shadows. Because if HMRC thinks it's just a paper shuffle to dodge tax, they'll come after you faster than you can say expenses claim. So yes, it's legal, yes, it works, but only if it's genuine. Get proper advice before you even think about it. And property is just the warm-up, because the next move, it's pure tax wizardry, the kind that can slash your corporation tax bill today and leave you with a six-figure tax-free retirement pot tomorrow. If you're running a limited company, there's a seriously underused tax move that's completely legal: the director's pension contribution. Now, Farage hasn't spoken much about this publicly, but if he's getting good tax advice, he's probably using it. This one move lets him save on corporation tax now and build a tax-free retirement pot for later. If you're a company director, your company can flood your pension with contributions as an employer. That's because money goes in before tax, which means it reduces the company's profit and lowers your corporation tax bill. So if Farage's company earns 100,000 and it puts 20,000 into a pension for him, that 20k is classed as a business expense. It knocks his taxable profit down to 80k. He saves 25% of that 20k in corporation tax, so 5 grand saved. And the 20k goes into a pension that grows tax-free until he retires. That's not just tax efficient, that's tax wizardry. If you're running a limited company and you're not already doing this, here's how to start. Set up a director's pension. You want a SIP or a SAS. Have your company make contributions directly, not to you personally. Stay within the annual allowance, so currently 60 grand a year, including personal contributions. Make sure the contributions are wholly and exclusively for the purpose of business, which in pension terms, they almost always are. Think of it like moving money from one of your pockets to another, but getting a 25% tax refund every time you do it. Future planning is smart, but what Farage tried next, that's where things get controversial, because at one point he allegedly set up an offshore trust in the Isle of Man, then later claimed he wasn't rich enough to use it. So what was the plan? Why did he back out? And could this ever make sense for someone like you? So this next move is about what Farage almost did, then backed away from. Years ago, he reportedly hatched a plan for a trust in the Isle of Man called the Farage Family Educational Trust 1654, which, I mean, it sounds like a Hogwarts spin-off if Voldemort was the headmaster instead of Dumbledore, but it's real. He later claimed he never used it, saying, and I quote, "I wasn't rich enough to make it worthwhile," which if true is kind of hilarious, but also totally plausible, because offshore trusts are not just expensive, they're a compliance nightmare. Halloween worst nightmares. Offshore trusts, especially ones in places like the Isle of Man or Jersey, have historically been used to pass on wealth without triggering inheritance tax, reduce capital gains tax on foreign investments, shield income from UK tax if you're non-domiciled, keep assets confidential or outside of your estate. But HMRC caught on, and now offshore trusts are a total compliance nightmare. There are automatic reporting rules, massive penalties for non-disclosure, constant scrutiny from HMRC, and reputational damage if you ever get called out for it. Just ask Farage. So unless you're sitting on multi-millions, it's just not worth it, which is probably why Farage pulled the plug. But you still want to protect your assets. You want to plan for the future and minimize inheritance tax if you've built a successful business or a property portfolio. So here's what you can actually use legally in the UK. Business relief, so formerly BPR. If you own a trading company for 2 or more years, the shares can qualify for 100% IHT relief, and that means you can pass your business on to your kids tax-free. Farage probably qualifies for this, by the way. There's also relevant life policy, a company-paid life insurance policy that pays out tax-free if you die, and it doesn't count towards your pension limits. It's tax deductible for the business, and it's not a benefit in kind. Then you've got onshore trusts. You can set up a family trust in the UK to manage assets for children, protect vulnerable beneficiaries, or ring-fence inheritance. As long as it's properly structured and disclosed, it's completely legitimate. And most importantly, you can do all of this without stepping foot into offshore grey zones. The real takeaway isn't that Farage is a tax genius, it's that the system he criticises is the same one that gave him his biggest advantage. The system isn't broken, it's just misunderstood, often by journalists. And now you understand it too. See you next time.